Welcome everyone to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Graya. How are you doing today, Jerry?
Very good, Jeremy. How are you doing?
Great. I'm really looking forward to the interview we're doing today with Gabriel Fanous. He is a spectacular business owner. We've had some entrepreneurs on in the past, but this entrepreneur that we're going to be having on later in this segment, as well as in the next segment, is going to be something you really want to stick around for. And for the rest of the show, Jerry and I were talking about topics for today, and we want to look at the Federal Reserve, what's going on over there, talk about the BRICS nations, what's happening over there. Also just talking about the financial system in general and people's approach to the financial system and how they're becoming aware of the financial system and what you're supposed to do about it. Mm-hmm. And finally, I think one of the things I really want to talk about later in the show is to ask and answer the question, Jerry, is gold expensive? Is it expensive now that it's trading much, much higher? What else do you want to talk about later on in the show coming up after the interview?
Obviously, the major headline this week that we were witness of was the U.S. Federal Reserve rate hike. So we got to talk about that and where we're going and what the market expects going forward. So we have to be cognizant of what the Fed is going to do and what they're going to say, of course.
The number 18778 Silver, the website, guildhallwealth.com. It's important today with all of the uncertainty that's happening in terms of the value of currencies that you hold actual real money. That's why we call it the Real Money Show, because what real money does is it protects value. It's a store of wealth, and that's what gold and silver does. What we do here at Guildhall is to help people acquire actual physical gold, physical silver. We follow the motto, if you can't hold it, you don't own it, and that includes even putting it into a registered account. Guess what? You can go to the vault where your product is held, fully allocated, fully segregated in a vault held outside the banking system, but within a registered account. And guess what? You can go there personally, audit your holdings. And what does that mean? You can hold it in your hand. There's no counterparty risk. You own your product. No matter what you do at Guildhall, you own your physical asset. And that's very key. We're going to talk about that a lot more. Coming up right now, we've got an interview with Gabriel Fanous, and this is going to be really, really good. If you are a business owner and you want to get some tips on success, stay with us here on The Real Money Show.
Guildhall dedicates a segment of the show to interview an owner of a small business or medium or large business called Spotlight on Small Business, to hear about their story, how they've dealt with challenges and are dealing with challenges, and hearing about their successes as well. Being in business for over 20 years, it's a very humbling thought, so we want to be able to use this show and platform to help other businesses share their voices and stories and successes to our listeners all across Canada. Gabriel Fanous is the Vice President of the Aero Group of Companies, a Scarborough conglomerate of 24 companies within 3 industries. We got business services, finance, sports, and entertainment. He established KGS Research, the public opinion polling division of the Aero Group, and more recently founded Red Owl Boxing, a brand that is dedicated to investing in grassroots boxing, marketing boxing to the 18 to 34-year-old demographic effectively, fighter storytelling, and putting on great fights. He is also part of a group bringing an arena to Scarborough Town Centre, the future home of the Scarborough Shooting Stars and Red Owl Boxing's professional extravaganza, Boxfest at the Owl's Nest. Gabriel, welcome to The Real Money Show. Thank you for being with us today.
Thank you. Thank you for having me.
Appreciate it very much. Very excited for the show. Now, we want to talk a little bit about your businesses, from the Scarborough Shooting Stars, who debuted last season, which went on to the Canadian Elite Basketball Association Finals. Congrats to them. To Red Owl Boxing with your brother Steve Fanous, which hosts Boxfest number 4 coming up May 13th. I'm a huge fan, love boxing all my life. And Air Group of Companies, who celebrated becoming the first billion-dollar company from Scarborough. And we also think it's important to mention that one of your partners, along with Sam Ibrahim, Shaman, has been acknowledged as the first female in Canadian history to start a billion-dollar company. So again, congratulations on these amazing accolades. I'm just looking at the tail of the tape here, the track record of success. Definitely the Midas touch with you guys. We can see a clear trend of the strategy of fostering growth and charity right at home and bringing it back to grassroots. What is the importance of your business in the community, Gabe, and how do you see it expanding?
Thank you. Thank you for that. Community is very important to us. Our community, we feel, is our competitive advantage. Many of us are sons and daughters of immigrants. Like my grandparents still live at Brimley and Lawrence. They've lived there for almost 40 years now. We owned a convenience store at Kennedy 401 in the 80s. There are a lot of great stories and talented people in our community, but sometimes many of these people are perhaps overlooked for a variety of biased reasons or perceived flaws. Many of them just need a chance, and they can be great. We wanted to build an inclusive business that provided opportunities to people in Scarborough, regardless of where they come from, if they had the slightly longer surname, or even if they got in trouble as a youth. As long as you were willing to put in the work and believe in the vision that we could all achieve great things together and that you can have a successful and fulfilling life, that's the kind of person that we wanted to be a part of our organization. And we've been very lucky that we've had great people at our organization. Our people are our greatest assets, and that starts with the community. And we want to continue doing more of that, continue to build and continue to provide opportunities for people in our community. And that's what this whole Aero Group of Companies business is all about.
Mm-hmm. We definitely see that with the partnerships and the community outreach. And even most recently, the Aero Group of Companies recently celebrated its annual staff appreciation event down in Miami, where you had the immense privilege of meeting and interviewing one of my favorites, boxing legend, Iron Mike Tyson.
Right.
You must have been, I would have been nervous. I don't know how you did that, but were you asked his advice on how you can help boxers today? And he spoke of educating and giving boxers an avenue to build their skills. And he mentioned to you to create a union for boxers.
Right.
What are your thoughts on that?
First of all, Mike Tyson, interviewing Mike Tyson was a dream come true, definitely like a bucket list item. I found him to be so genuine. I found him to be so kind and open. And, he was so nice to everybody, took pictures with everyone. And he truly is a people's champ. And he really did seem interested in what we were doing at Red Owl Boxing. I don't think creating a union is practical given the fragmented structure of boxing as it exists today. If you think about it, there really aren't any boxing businesses or brands that exist today. Right now we have regional promotional companies that put on events. What we want to do is we want to build a brand. Red Owl Boxing is a brand that invests in infrastructure and grassroots boxing, a brand that markets to the 18 to 34-year-old demographic, a brand whose mission it is to tell the fighter story in a way that resonates with the TikTok generation, and a brand that puts on great fights because styles make fights. This brand, we want it to be recognized for providing opportunities for people in boxing, and a brand that treats the fighters with respect and integrity. A union is required, most of the time only when those in leadership are perhaps not doing it right by the people. The fact that he suggested a union, it illustrates a lot of the problems that we, know exist in boxing. So I think that there's a better way to go about it, and I think that resonate with people in the hearts and minds of sports fans, building a business that provides opportunities and building a brand that people can, look to and say, I'm a fan of this. I'm not necessarily a fan of this fighter or that fighter. Sure, there's going to be a lot of star fighters in the future under this banner, but we want people to be attracted to what the brand is, what it stands for.
That really stands out. Being fully diversified rather than union from the top down, be multifaceted and have a multipolar approach. It's a very new approach, and I like that about Red Owl for sure. Now, speaking of diversification, given the perceived uncertainties in today's economy, globally primarily impacted by the devaluation of our currencies, high inflation, your business in particular, Red Owl Boxing, has seen growth and momentum. As I mentioned, you have this Midas touch. What do you attribute this to, and what inspires you with your business?
I mean, look, man, to tell you the truth, I've been blessed with great relationships in my life. Relationships are the currency of life. That's what I believed. I don't need much inspiration. Every day I wake up, I'm inspired. Like I wake up, I get to do what I love. I get to do it with the people that I love. A lot of things inspire me. I've been a boxing fan my entire life. When my partner Sam started building basketball courts, for example, the playground, and that led to Scarborough Shooting Stars, I really didn't understand what he was doing, but we noticed how much the community loved what we were doing.
Mm-hmm.
And, when Scarborough Shooting Stars opportunity came to the table, I really was taken aback and inspired by what they were doing in basketball and saying, wow, maybe we could actually do something compelling around boxing too. Sam encouraged me to do it. And when I decided finally that we wanted to do it, I don't want to do it, halfway. It's like we're going to try to do this the right way. We're going to try to make a difference. And we're going to really put together like a 5 to 10 year plan to, enter the sport of boxing.
Mm-hmm.
I think people have fed off of the passion that we have about this sport. When you love a sport and you pour your heart into it, you pour your heart and soul into a project like this, you'll be surprised how many people gravitate towards it. So I think Red Owl Boxing is one of the most exciting things ever to happen to boxing. We built a state-of-the-art boxing facility in Brampton at 25 Kings Cross, where we host both amateur and professional boxing shows. We created a series, Boxfest, at the Owl's Nest. All of our pro shows are broadcast on the world's largest sports streaming platform, The Zone, and we've had over 120 viewers globally tune in to watch our show as of the last one, Boxfest 3. Our show is designed for sports fans who want to understand the stories of the fighters and watch great fights, and it's really a fun night out as well. Calling all sports fans, if you've never been to a live pro boxing event, you should come by May 13th in Brampton at the Owl's Nest. You can get your tickets at redowlboxing.com. If you can't come, you can tune into The Zone and watch it. And if you do want to come, we have a special promo code for your listeners. And if they go to redowlboxing.com, put in the promo code Real Money, they'll get 10% off of their ticket admission. And it's a fun night. It's a great vibe. A lot of people are there. It's always exciting to be there and to watch it. The energy at the Owl's Nest is incredible. And, it's just been a really fun project.
Oh, yeah, I contested. I was there at the Boxfest 3, and it was an amazing environment, amazing atmosphere. Again, you see the champ Zolt fight. Definitely encourage everyone to go check it out and check out the website and put that promo code Real Money into that code.
We're going to take a quick break from the interview with Gabriel Fanous, president of Red Owl Boxing and VP of Arrow Group of Companies. But first, visit redowlboxing.com, enter the promo code Real Money, and you'll get a discount for Boxfest 4 coming up on May 13th. More to come on The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. Visit guildhallpreciousmetals.com. Purchase anything, 10-ounce bar of silver, bar of gold, maybe a tube of silver maples, and you'll be entered into a contest to win 2 tickets for Boxfest on May 13th. It's The Real Money Show on AM 640. We'll be right back. Welcome back to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. Go to guildhallpreciousmetals.com and you'll be entered to win 2 tickets for Boxfest 4 coming up on May 13th. Or you can also go to redowlboxing.com, enter the code Real Money, and you'll get a discount on tickets for Boxfest 4 on May 13th. We're talking right now with Gabriel Fanous, president of Red Owl Boxing and VP of Arrow Group of Companies, here on The Real Money Show. Let's get back to the interview.
I've noticed a few social media posts of yours commenting on things that we talk a lot about here on The Real Money Show, particularly on the BRIC nations, Brazil, Russia, India, China, now South Africa, Saudi Arabia, Mexico nations. And it was actually refreshing to know that we have a successful leader, entrepreneur in our community awake to these realities. Could you please expand on these thoughts of yours, and what do you like about precious metals, and why are you so bullish in gold and silver?
I mean, I'm a history buff. First and foremost, I've loved history and reading history for my entire life, and I like to read Ray Dalio. I'm not sure if you're familiar with him. He was Bridgewater and Associates hedge fund manager. I really think we're entering a moment of seismic economic change. And if you study history, you'll understand why it makes sense, because there has never been, I don't think, a global reserve currency that's lasted over 100 years or so. I think the dollar's current run is about 103 years. It's been 50 years since Nixon took the dollar off the gold standard.
That's right.
And the U.S. essentially made the world trade crude oil in U.S. dollars after that. So effectively making a dollar a petrodollar. The U.S., it's no secret, is in like massive debt. They couldn't possibly print any more money. I mean, maybe they could. I'm not sure. I don't know. This is the hegemony of the U.S. dollar around the world is starting to be questioned for the first time in our lifetime. I mean, other countries are creating systems beyond SWIFT, cooperating together, talking about creating new digital currencies, accepting other forms of payment for crude oil. China is a rising superpower. There's so much political polarization in the U.S. and in other countries. The Fed is raising rates and trying to combat inflation, incredible inflation. I mean, just look around and pay attention. You'll see that it changes a very necessary, thing. And as far as precious metals is concerned, if you think about the price of an ounce of gold in 1933, when Franklin Roosevelt passed the Banking Act, he demanded everybody in the U.S. sell their gold to the government for, I think it was $20.67 or something like that, an ounce. And, at that time in 1933, you know what you could buy for $20.67? You could buy a fine Italian suit, okay? So what's the price of an ounce of gold right now? It's just under, I think, 2,700 CAD for an ounce. You could still buy a fine Italian suit for the same price, okay? So, for the same amount of gold, sorry. So, paper money can't do that. I'm not saying investing in gold is going to make you rich, or give you incredible returns, but you can count on it for stability. It's been that way for 5,000 years. While all the empires and their economies have come and gone, gold is still here. And, people need to just be aware of what's happening and what's going on. I mean, nothing lasts forever the same. Change is a necessary part of life. Change is a necessary part of success. And you can't keep your head in the sand and just think that, what you've been accustomed to is going to remain the same forever. I was appalled to learn that Justin Trudeau sold all of Canada's goals in favor of government, U.S. and other foreign bonds. And I find that to be incredibly, irresponsible decision to make.
Absolutely. And as a leader, coming as these, the history points that you made, this is the reason why you're a successful leader and have leadership here in Canada do what they did in selling off the ounces and the tons or the pittance of ounces that we had left in Canada. Definitely a negligent move, and it's causing a lot of Canadians to look outside of the box. And today there seems to be a lot of discrepancy right now outside of the box. People are looking right now regarding investments, either saving wealth with the conventional paper assets, financial instruments, aka stocks, and shifting towards saving and building of wealth with hard assets. What are your thoughts on this? And do you see any of your partners or people in your inner circles engaging in this type of mindset?
So, yeah, I mean, every decision the central bank makes impacts the markets and economy as a whole. That's why Wall Street listens to everything that Jay Powell says. This means investing your money into paper assets, stocks, other fancy Wall Street instruments like credit defaults, swaps. You're subject to the consequences of the decision of a very small group of people. In the research business, we have a saying, nobody is unpredictable. Look at the history of how these people have acted and make your decision on what to do with your money. You worked hard with it. You produced it. You earned it. You didn't go to a printer and print it. At Arrow, we prefer to invest in ourselves. If you're a good operator and you know your business, you can 10x your money. The best investment you can make is in yourself and in other people. We buy real estate together. We buy companies together. And we buy hard assets like gold as well. And my advice would be educate and bet on yourself.
Absolutely. Now, I want to thank you, Gabe, for that. And now before we let you go, this week for any order placed online at guildhallpreciousmetals.com We'll be giving away 2 tickets to Boxfest 4 coming up on May 13th to witness Red Owls champ Zolt Durrani Jr., who can make history. Gabe, in closing, please take a minute to share on this event and this fighter, and where can people follow you and your work?
Zolt Durrani Jr., 19-1 and 18 KOs, is fighting for a global WBO welterweight belt on Saturday, May 13th, only at the Owl's Nest. You don't want to miss it. This is going to be an incredible fight. We're very excited about it. You can follow us at Red Owl Boxing. You can go to redowlboxing.com to get tickets. You can watch it on The Zone. Starts at 7:30. He's one of Canada's most talented fighters, and we're really expecting great things from him. Looking forward to a great night and a great fight. So telling all your listeners to come out and enjoy it. There's nothing like coming to a live boxing event.
100%. Gabriel, thank you so much for joining us. We appreciate your time.
Thank you. Appreciate it.
Welcome back to The Real Money Show. The number 18778-SILVER. The website, guildhallwealth.com. Jerry, that was a great interview. I really enjoyed it. I have some things I was thinking about while you guys were chatting that I wanted to cover with you.
All right.
One of the things was you guys were talking about Gabriel meeting Mike Tyson and his thoughts on potentially having a union.
Yeah.
And I thought Gabriel said something very interesting, because he essentially said, if you do right by the people, you don't need unions. And I thought, wow, that's so true. If you're constantly doing right by others, which seems to be his whole ethos, let's do right by people and they will take care of you. Right. I love that whole concept, and the idea that if you do right by people, you don't need others fighting for your equity, right? Fighting for equality, fighting for your piece of what you deserve as a worker. If you're being taken care of, you wouldn't do that.
That's right. I
right?
appreciate it. That's right.
So I definitely appreciated that thought in there. Another one was he was talking about relationships being the currency of life.
Isn't it?
And I thought, first thing that came to my mind when you guys were talking about that, I thought, oh, people come in here all the time, or not all the time, but they often ask, well, what's the difference between buying, 1 ounce RCM gold bars with you versus buying it through the bank? And after years of getting that question, we've kind of realized, well, the answer is pretty simple. Going through, a financial institution like that, it's just a transaction.
Right.
You're just part of a transaction. There's no feeling. There's no want to help you per se. Whereas with Guildhall, it's a relationship. So it's transaction versus relationship. It's more than just what the price is. It's that we're here to help you, as much as possible. And, I probably, to my own detriment, personally, I find myself, I had a client today, bought 40 ounces of silver, 45 minutes in my office, the emails are just stacking up, but we're having a great chat about things, so, and the, a good conversation back and forth where there's learning is great. And that's what relationships are. And
100%.
Part of it as well, working with Guildhall, is that the relationships is about knowing what's going to come next, knowing your entry plan, knowing your exit plan. I'll give you one other example. I'm sure you have some as well, because I got to pass the mic to you at some point. I was talking with someone who is new to the market. They do have some physical metal they've purchased for their portfolio, but a lot of the questions were really about, well, how do I handle the rest of my portfolio? Because I don't really find myself seeing eye to eye with my advisor these days. And we're not advisors, so we can't really provide exact help on that end. But my observation in this scenario was that it's oftentimes about people looking to take responsibility of their portfolio, that they have to now take responsibility for it. So that's kind of the first thing they realize when they're buying metals, is that for the first time, this decision is on them. If the market goes down, it's their decision. They can't say, well, you made that mistake. They're not going to they can't blame an advisor. That's why oftentimes people will go to, oh, so if I own it, can the government confiscate it? Because that's the only excuse to it disappearing is, well, that's the only way it would be an outside circumstance that's not my responsibility. So I see this connection between ownership of physical metals and responsibility of your financial situation, which leads into that bigger awareness of how the system works and where do you put your money. And so we were having a talk today. I'd love to get your thoughts on this. 15% allocation in metals. Bits and Associates, based on the fact of, you want to have negatively correlated assets in your portfolio. Gold and silver are negatively correlated to the dollar. Everything else you have is positively correlated to the dollar. And so if you have 15%, you are hedged. But are we in a typical portfolio scenario? I know there's outliers. I know there's plenty of money to be made. There's always winners and always losers, okay? But is the stock market supposed to double from here?
No. I mean, that approach, the Ibbotson approach, included the stock, bond, cash approach. We were the conventional ways of splitting a portfolio. And that study was done back in 2011, where they deemed 15% to be prudent in physical precious metals holdings. Whether you're a corporation or whether you're an individual, you need to hold at all times 15%. That was when debts were very low. That's when confidence in the system was relatively fair. Inflation was under control. The Fed never did quantitative easing 1 or 2, or there were no bailouts prior to that. This is a different time, and therefore there is an argument for higher allocations in precious metals, because as our fundamentals, the 4 pillars that we talk about here at Guildhall is currency depreciation, devaluation caused by inflation. Then we look at supply and demand issues with physical precious metals. How quickly can you get into your hands? And are there enough to fulfill all of the millions of contracts that are in existence that are really empty contracts? And then concluding geopolitical risks and issues. We have massive countries, as Gabriel mentioned in the segment prior. This is a seismic shift away from the conventional. So as a result, we, on our small scales, whether it be with your family, family fund, or in your corporation or business, we have to look soberly at this market and realize, what once worked with stimulus and low rates, those things have been kind of taken from us, right? They've taken away the stimulus. They've taken away low interest rates. So how do we position? And this is in the relationship building. We're having these conversations with people. And, I had a conversation with someone yesterday. Jerry, I'm trying to get a hold of you and I can't hear from you. You're usually very responsive. And I had to apologize. I'm spending a lot more time with people because people are awakening. And Financial Times reported that investors are waking up to the debt dysfunction. And it's so true because people are waking up, Jeremy, and they're asking real questions, and they're not getting the answers from the typical financial planner or consultant or banker. Try to get through to the bank today. I mean, how quickly can you get a response from your banker today? It's a different time, and as a result, people are taking control of their wealth themselves.
The number 18778-SILVER, the website guildhallwealth.com. We'll continue this conversation on the other side of the break on The Real Money Show on AM 640. Welcome back to The Real Money Show, the number 18778-SILVER. The website, guildhallwealth.com. In the last segment, Jerry, we were just talking about relationships, important, and learning about the markets and debt, the debt-based market. And I just wanted to quickly just finish the point on the stock market doubling from here. All you have to do, and again, I know there's winners and losers, right? There's always going to be winners and losers. There's no doubt about it. But just from a basic perspective, a client of mine today was saying, we're moving from wants to needs. What does that mean? It means, do you need 4 pairs of running shoes? Do you need that extra technical gadget, right? Do you need these things? Probably not. Well, those companies that are seeing their sales drop. Why? Because people's money wallets are being tightened, and they're putting more money into the needs, less into the wants. And you're looking at cost of doing business rising across the board, whether it's employees, insurance, rents, energy. Oh, now you want to bring in some goods where you've had it being produced somewhere else in the globe. Well, your containers have gone from $3,000 to $15,000. So now there's slowdown. Well, if you don't have goods on the shelf, you can't sell them, can you? So the margins are coming down. So I ask you again, not you, but I'm in the general sky, is the stock market supposed to double from here? What kind of economic activity do you need to push the stock market to double from here after it's gone up? Based on the fact of this low interest rate for a decade, zero interest rates for so long. You've got to be smart about this. You don't have to put your hands into the authority figure on TV, bobbling their head saying everything's going to work out. It's all going to keep going up from here. Like you got to be a little more, thinking about it. And then to go to your debt, we were talking about debt. I was looking at a house, not a particular house, just checking out the market. And, between my wife and I, we don't do poorly. We don't do too bad. But if you want like something regular, and I know it's always been expensive, you want to buy a regular home in the city, it's crazy. So you go, you go to your mortgage calculator and you go, well, what if I amortize it to 30 years? All of a sudden, it's like kind of affordable. You're like, well, what's next? Like London, where they go 100-year mortgage?
Like Japan as well, yeah, the 100-year
right?
amortization.
So you go, well, wait a minute. You guys, instead of giving us mortgages at the bank for 2 times earnings, 3 times earnings, you're like, well, let's pump it up to 6 or 7 times earnings.
That's right.
We'll lend it to you. And then when it gets even more unaffordable, still the bubble, I think, you say, well, we'll just amortize it more so you can keep those things low, keep the payments low. It goes both ways. You say it's becoming untenable for people. And not only that, it's become untenable for the bank. They need you more than you need them. They can't afford to have you default.
That's right.
That's probably why they've gone to the 30-year amortization, right? Some quick thoughts on that, Jerry? Any feedback on that?
Well, absolutely, because when we're looking at things like stocks, and when there's a headline now that global equity funds are seeing the biggest weekly outflows in about 5 weeks, and this is the combination of high inflation stokes low growth. So it doesn't matter what industry you're in, across the board, as you mentioned, shipping containers, importing. It doesn't matter what industry you're in, your costs are going up, and stocks who have to report their quarterly earnings are not beating the street. So what you have there is a mix of stagflation, and this is a very bad mix. You had this week, Wednesday, the U.S. Federal Reserve raised interest rates another quarter point. They're up to 5.25. Now the Fed swaps are actually pointing to a rate cut by July or maybe even June. So pivot talks are already on the board already. We're expecting rate cuts. The U.S. dollar is hovering around 101 right now, the dollar index. So we're waiting for that to break down even further. And this is why we're seeing gold set for the best week since mid-March on fears over not just with the Federal Reserve and inflation, over U.S. banks, regional banks. There was Raul Paul who commented on the FDIC, and on Monday, Janet Yellen confirmed that due to the current U.S. debt ceiling drama, the government may not be able to service its debt as early as June 1st. So he shared his perspective on Twitter. Raul Paul did. He stated, feels like the FDIC, the Federal Deposit Insurance Corporation, the Treasury, and the Fed are going to have a lot more work to do this weekend. I'll be surprised if we don't lose a few banks on the weekend. And finally, a larger policy response to them to try to stem the outflows and the flow of failures. And he's talking about the over-leveraged economy, insufficient growth. You can't grow your way out of this, right? And growing central bank balance sheets. The debts don't matter until they do, as you say, Jeremy. And this is exactly where we're headed. We're heading into this culmination, and countries don't want anything to do with this U.S. dollar, the U.S. Hegemony, as Gabriel mentioned in the previous segment. It's over. So we have to shift, and this is a seismic shift away from the traditional stock, bond, cash approach, and the focus on hard assets becomes of paramount importance, Jeremy.
The number 18778-SILVER, the website, guildhallwealth.com. And Jerry, we always have to start talking faster towards the end of the show.
How much time do we have left?
As people become more aware of the system and sort of the corruption in the system, and that started going back before 71. They were printing money. You're the reserve currency. You're printing money, but you're keeping the dollar at $35 an ounce. I'll take the dollar, I'll take the gold, not your dollar. Oh, well, no, we're going to close that window now. Okay.
Yeah, thanks,
you have to take our debt. So, the system was corrupt, and this idea of, well, we're going to have a gun to your head that if you don't raise the debt ceiling, then this whole system could collapse. And you're sitting there saying, well, Why do I have to have a gun to my head to participate in a corrupt system? You know, like even just like Gabriel was saying, it's about putting people first. Well, that's not putting people first. You're saying, listen, you're a slave in Egypt, and if you don't give us your bread rations because the Pharaoh's bank is asking for it, then you're not going to get rations for the next 3 weeks. Well, why do I, as a slave, why do I have to be part of that system? And if you don't think you're a slave, look at your taxes, your income taxes, look at the money you pay on after taxes, and look at the inflation rate.
Enough said.
You're already at 60%. Okay. Now inflation's supposed to be what? Just a natural phenomenon? I don't think so. So, why do we have to participate in that system? If you are hedged enough, maybe have enough assets outside that system, then you can say, let that system go.
That's right. That's
Wait,
right.
did I just say let that system go?
Let it go.
Like let my people go? Okay. Is gold expensive? Is gold expensive at 20, what are we at? 2000, 2050?
2000, yeah.
Okay. I had a client in my office asking that question. So we did a little bit of a comparison. Back in 2011, that was when we kind of saw gold close to these numbers. And the debt in the US was 14 trillion. And the debt on the Fed's balance sheet was 2.5 trillion. Now it's above 10. The debt in the US is above 31, heading towards 32. Is gold expensive compared to those debts?
Absolutely not.
I mean, if you think about it, you've got to go
Clear ratios right there. It's simple math.
Yeah, you go 2000 to 14, okay? And now we have to double that to where we were for 32 trillion. So I'd say when you compare the price of gold to the amount of debts that have been created over the last several years, and we're not talking global debt at, over $300 trillion. We're not talking unfunded liabilities. We're not talking derivatives. We're just talking pure debt. So, you do end up kind of reaching those points where the numbers start to look like if the dollar's worthless, gold's priceless.
That's right.
And I think we are heading towards those kind of concepts where you either own it or you don't own it. Right.
And the focus would be on real money and getting out of and not participating in that system of derivatives and anything credit-based, because as JP Morgan stated, gold is money and everything else is credit. Well, what is money? Money has to be portable, divisible, durable, recognizable, and then scarce. And scarcity is the most important facet for your money to become a store of value to last another 1,000 years for you and your family. And with regards to, looking at all the derivatives, and is gold peaked? Has it peaked? Absolutely not. When we look at all of the derivatives, you talk about quadrillions potentially of derivatives. If just 1.5% of all of the things that you can invest in, whether it be unfunded liabilities, private business, real estate, bonds, stocks, 200 trillion, if 1.5% decided to jump into the small $1.5 trillion market of gold, investable gold, you eliminate all the gold reserves in the entire world. Less than that for silver, less than 1%. If all of the money jumped into the silver market all at once, already, and you're looking at the headline of the silver supply in Mexico, as Mexico is actually punishing the miners from bringing the silver out of the ground, this is going to be the most epic squeeze in the gold and the silver market coming up because of simple economic 101 principles, supply and demand, Jeremy.
I love it. Jerry, do you know what a house cost in the U.S. in 1955 as we round out the show?
How much?
It cost $10,950. Do you know how much it would have cost you to go to Harvard back in 1955?
How much?
$800 a year.
Goodness gracious.
So have things just in a phenomenal kind of way, natural phenomena, just gotten expensive? No, they've printed money or currency. They've gone into debt. They've put all this cash into the ether, and things have just gotten more and more and more expensive as we've put leverage onto future generations. And this is about the devaluing dollar and how do you protect yourself against it? And that's what gold and silver do.
100%. And remember, go online to guildhallpreciousmetals.com. Place any order this week online for a 10-ounce silver bar, a kilo bar of silver, a tube of silver maples, a gold maple perhaps, and you'll be entered in to a draw to win 2 tickets to Boxfest 4 coming up May 13th at the Owl's Nest, coming up to witness the Red Owls champs Zolt Durrani Jr., who can make history. We're looking forward to that. This is going to be a fire event. I want to thank Gabriel again for coming on the show. But Guildhall, preciousmetals.com, guildhallwealth.com to get out of the traditional financial system, out of conventional arrangements, and into hard assets, whether it be to take home for the depository or your RSPs or TFSAs. This is the time to look into it. Do not delay. Jeremy.
The number 18778-SILVER, the website guildhallwealth.com. That does it, everyone. Thanks for listening to The Real Money Show, and we look forward to speaking with you next week. You've been listening to The Real Money Show on AM 640.